What's up, all you future homeowners? Thanks so much for checking out my channel. And today we're talking about, can you buy a house after a bankruptcy? We're starting to see credit card bills pile up. Many of you might be thinking about bankruptcy, or maybe you've filed bankruptcy and homeownership is still a goal of yours and you're wondering what it's going to take to get you into homeownership. Today, we're going to talk about bankruptcies and the fact that you can buy a house after a BK. So don't give up on your dreams. Stay to the very end. I'll give you some tips to help you out so you can become a homeowner in the future. There's typically two types of bankruptcies that most common folks are going to take a look at in the event that they need to file a bankruptcy. A Chapter 7, which is where you essentially wipe away all of your debt that you have, and a Chapter 13. On a Chapter 13, if you're just getting way too in over your head with debt and you still have a decent income, you can look at a Chapter 13 where you can eliminate some of the debt through a payment plan. Typically, they do these payment plans over a 3-year or a 5-year period, but you have to be able to qualify based on your income and all that. So it's not as cut and dry as you might think. This is why a lot of times people are hiring bankruptcy attorneys to kind of help them through this process. But you're going to fall typically into one of the two categories. Again, a Chapter 7 means you essentially wipe away all the debt that you have. And on a 13, you're on a repayment plan, paying all or some of the debt back over a period of time. Now, why I decided to do this video today is I'm seeing more and more people being pushed to the limit with their debt right now, whether it's credit cards, home equity lines of credit, people refinancing, taking out cash to pay off some other bills. But you want to make sure that before you even get to this place of thinking you have to file bankruptcy, you really start to dial in your budget. Start to look at ways that you can get rid of some of your unneeded expenses. Right now is a time to cut back. Don't start spending just because you're down or you're whatever reason. This is not the time of the year to be doing that. We have to buckle down to get through this tough economy that we're all dealing with right now. But if you get to the place and now you're thinking you have to file a bankruptcy, you can have some hope in the future that you can purchase a home. So don't give up on yourself. So how does a bankruptcy affect you? One, it's going to affect your credit score. Your score is going to take a hit when you go through this process. It probably already took a hit, especially if you haven't been making any payments on your credit cards or any other bills that show up on your credit report. Maybe if you're already in collections, you've already saw your score drop. So it's definitely going to have an impact on your credit score. And according to debt.org, they say that if your score is around a 680, you will lose anywhere between 130 and 150 points in bankruptcy. Someone with an above average 780 credit score would lose somewhere between 200 and 240 points. But get this, they say here that if your score is already in the 400s to 500 range, when you file bankruptcy, you might actually see your score boost potentially another 50 points after filing your bankruptcy. So you can see it's going to have a massive impact on your credit score. It's not going to ruin you forever. Even though a bankruptcy stays on your credit report for typically 10 years, you will be able to recover from this. And I'm going to give you some tips on what you can do post bankruptcy to start rebuilding your credit score. This is why credit is so important and we always have to protect it. You know, being in the mortgage industry is for as long as I have, I've seen so many people co-sign for others, especially family members, whether it be vehicles, credit cards. And if that person ever decides to not make the payment or they forgot to make the payment, I've seen credit scores just totally tank. So you have to make sure that you protect your credit first and foremost. Be very, very careful about who you ever decide to co-sign for. In my opinion, I would probably stay away from co-signing just because you don't want to put yourself in a bad position. And obviously, once someone misses that payment, it affects your score significantly. It could ruin a relationship. So I would definitely stay away from doing any sort of co-signing. That way you always protect your credit going forward. And if anything ever screws up, you have no one else to blame but yourself. Now, here's the most important thing. So even if you filed a bankruptcy, you can still buy a house in the future. So again, don't give up on yourself. Don't give up on the dream of owning a home. If you had a Chapter 7 bankruptcy and you're looking to qualify for an FHA loan, which is what most buyers end up doing, the waiting period after the discharge date is 2 years. So you can still purchase after the 2-year mark. Totally fine. I've done many of loans for people over the years that have filed bankruptcies. Sometimes I've even seen clients that have had multiple bankruptcies that were still able to buy a house. So again, still doable. If you're looking to qualify on a conventional loan after a Chapter 7 bankruptcy, you have to wait 4 years after the discharge date. And on a VA loan, it is 1 year after the discharge date. Now, sometimes you can have situations where you have had an extenuating circumstance. So make sure that you do talk to your lender if you filed a bankruptcy, because if there's something that actually meets the criteria, maybe you can get into a house sooner. But this is something that's definitely done on a case-by-case scenario. Just because maybe your friend or family member or someone went through the process and it didn't work for them, maybe it'll work for you, or vice versa. So you have to make sure that you do talk to a lender. And again, just be very honest and forthcoming, because we honestly don't care what the reason was. We just want to make sure that we get all the data and all the information up front, because a lot of times in these situations, especially if we're looking at an extenuating circumstance, we need to talk to our underwriter. We need to give them the entire picture of, hey, this is what happened to Mr. and Mrs. Buyer. This is why they missed their payments. This is why they went into bankruptcy. Now they've rebuilt themselves and now they want to buy. They need to have the whole story. So if there's bits and pieces that were missing because you failed to disclose that to your loan officer, that could harm the deal. So just make sure you're being honest, give them all the information, so that way your loan officer can do the best job possible to figuring out what it's going to take for you to get into your house. Now, on a Chapter 13 bankruptcy, again, you can still purchase your home, but it works a little differently since you're making payments back to the court based on your agreement that you've agreed upon. Now, typically on a Chapter 13, you will have to wait at least 1 year into your bankruptcy before you start to purchase. Now, another thing that always comes up too is that you have to get court approval. So even though you've surpassed the 12 months into your bankruptcy, you're making on-time payments, nothing's going late, that's a great thing. You would then have to talk to the bankruptcy court, and the judge will have to allow you to purchase a home while you're in your BK. Make sure you talk to your attorney, talk to the judge if it's something you truly want to do while you're going through the process. Again, I've done loans for people that were in the middle of a Chapter 13 bankruptcy and we were able to get them financing, no problem. You just need to make sure that the court approves it. That is the biggest thing. And you also cannot be late on any payments, because remember this, you've already filed bankruptcy, which means you were in over your head with debt. So if you're thinking of buying a house, the last thing any lender is going to want to see is that you're in bankruptcy, missing payments on a Chapter 13. That does not make any lender feel warm and fuzzy that you're going to be able to handle a mortgage payment of thousands of dollars a month. So make sure, again, you're protecting your credit and you're doing what you need to do on your end to make sure that everything is on time and you're not skipping a beat. So a lot of buyers get really down after a bankruptcy. I get it. It's a total shot to your ego. But the thing is this, you cannot give up on the credit system here in the United States, because so much of what we do is based on credit. I've had clients that were working in military jobs or top secret clearances that they had to protect their credit. No matter what happened during the 2007, 2008 crash, if they didn't keep their credit score, they would have lost their job. Your credit card interest rate, your car loan interest rates, your car insurance rates that you get, they all look at your credit score. So you want to make sure that you are rebuilding your credit. So many clients I've heard over the years that once they file a bankruptcy, they just want to pay cash for everything because they never want to get themselves back into debt. And I get that. It's a traumatizing experience, but you can still take small steps to get your score back to where it was. For example, one of the easiest things that you can do is get a secured credit card. Get a secured credit card. A lot of banks offer those where you can put money onto a card similar to a debit card and it'll show up on your credit report. It's going to help you start building your credit. Now, that's one of the easiest ways to start rebuilding from day one. And I would definitely recommend monitoring your credit going forward. So whether you're using Credit Karma, Credit Sesame, Experian, any of these websites out there, so you can maintain knowledge of what's going on your credit report. So many of us are oblivious to what's being reported, what your score is, anything that's on there. So the fact that you've gone through this process and you're almost wiping your slate clean again, you want to make sure going forward, you know exactly what's on there. That way, if there's any inaccurate information, you can put a stop to it quickly. And again, we're working back to build your score up. This one's going to be obvious. Don't get in over your head. That was one of the reasons that you got into bankruptcy in the first place. So don't let it happen again. If you're using a credit card, be diligent about keeping your balances low. Don't go racking up debt buying clothes, traveling, and just unnecessary items that you don't need. Be very disciplined with your budget. Be very disciplined with your credit cards, and it can easily get you those points right back, and you can be in the 700 range in no time. And one thing to keep in mind too, once you get your secured credit card and you start making on-time payments, you will start to get regular credit card offers. Now, one thing that's always really good is to get a credit credit card where you have a low or no annual fee, right? We're rebuilding here. So there's no point in getting an American Express credit card and you've got a $600 annual fee. Get a credit card that has no annual fee, or maybe 99 bucks at the most, and maybe some cash back too. So the money that you're spending, you're getting some rewards, and you're not just putting money on a credit card and getting nothing out of it. A lot of my credit cards that I use have some sort of rewards, whether it's a traveling reward, whether it's cash back. You want to look for something that where you spend money on, you can get something back. If it's a gas card, Chevron has credit cards and all that stuff. So you want to find places where you can maximize the most of those benefits. And last but not least, remember the credit rebuilding process is going to take time. So don't get frustrated if in 30, 60, 90 days, your score is not moving as fast as you'd like. This might be a process that could take maybe a year, maybe even 2 years. But remember, the upside of where you're headed far outweighs the frustration where you could be at today if your score is at a 500 or even a 600. Remember, if you lost 1 to 200 points, it's going to take time to build that back. So don't give up. And especially if buying a house is a goal of yours, remember, you don't have to have perfect credit to buy a house. Most lenders today will go as low as a 580 credit score and you can still get FHA financing. So you can definitely get into a home once you start to rebuild your credit and you start to put yourself back on the right track. That wraps up this video talking about bankruptcies and the fact that you can still buy a house after a BK. So if this is something that you've gone through, don't worry, pick yourself up, stay positive because the opportunities are still out there. If you need help working on your credit, feel free to reach out to me. You can send me an email in the description below. I can get you connected with some of our credit experts that can help you get back on the right path. So that way we can come up with a game plan together to get you into home ownership, whether it's this year or the year after. We're here for you. Thanks for watching and I'll see you on the next video.